Many traders see two peaks on a stock chart, assume it is a standard double top, and immediately sell short. But to avoid getting trapped, you need to look for a highly specific variation, the Adam and Eve double top. We are going to break down how to visually identify these distinct peaks, filter the setups for maximum probability, and mathematically calculate exact profit targets. Mastering this exact visual sequence prevents the false breakout losses that catch out traders who short every twin peak they see. Step 1 is identifying the first peak, which we call Adam. The Adam peak forms a sharp, narrow, inverted V-shape, often created by a quick 1 or 2 day price spike. The second peak is Eve. Eve is noticeably wider and rounder than Adam, taking much longer to form and roll over. Look at the base of this Adam and Eve double top near the horizontal line. The left Adam top remains narrow. Moving right, Eve starts slender at the highest point, but clearly widens out as the price drops back toward the valley floor. Confirming this exact visual asymmetry, narrow on the left, wide on the right, is the mandatory first step before applying any further trading rules to the chart. Now that we have the shape, we have to filter for the best market environment. You should primarily look to trade this pattern during a broader bear market, a prolonged period when overall stock prices are falling. The data backs this up. In a bull market, the pattern has a break-even failure rate of 14%, but in a bear market, the failure rate drops to just 7%, and the resulting price decline averages a much deeper 22%. The second filter is pattern height. We measure the height as the vertical distance from the lowest point of the valley floor up to the highest peak. Patterns with a large dip between the peaks, meaning a taller overall structure, perform significantly better and lead to deeper downward breakouts. By requiring broader bear market conditions and tall pattern structures, you rigorously filter out weak, low-probability trades before risking your capital. Next, we check the trading volume to confirm the pattern's reliability. First, we look for heavy trading volume directly beneath the left Adam peak. On this chart, an Adam and Eve pattern forms between December and February. Notice the high volume bars spiking beneath the sharp left peak. Moving into the valley, the volume bars form a clear U-shape across the bottom. This specific volume profile shows that buying pressure dried up as the price consolidated, and then selling slowly rebuilt as the Eve top rounded over. The volume profile acts as the internal engine. When it matches this sequence, it confirms that the external shape of the pattern is valid. With the shape and volume confirmed, we need an exact trigger point for the trade. We start by drawing a confirmation line, a horizontal boundary placed at the lowest point of the valley between the two peaks. Returning to our previous chart, the pattern is invalid until a daily candle closes below the confirmation line. Selling early is dangerous. There's a 65% chance the price simply rebounds from the valley floor and moves higher. Even with a confirmed breakout, you must check for underlying historical price support. Support is a previous price level where buyers historically stepped in, acting as a floor that can halt a downward drop. This chart illustrates a failed setup. The price successfully broke below the confirmation line, but immediately crashed into an older, established symmetrical triangle support zone. A technically perfect breakout setup means nothing if the downward price trajectory is blocked by an immediate historical support level. When the setup is clear of support, we use the measure rule. The measure rule is a formula used to calculate a specific minimum price target for taking profits. On this chart, step 1 finds pattern height. Subtract the 25.78 confirmation line from the 28.72 peak. Step 2, halve that 2.94 difference to get 1.47. Finally, subtract 1.47 from the confirmation line, projecting our exact target of 24.31 at point A. Since prices will pull back to retest the breakout point nearly 60% of the time, you need to place your stop-loss order comfortably above the confirmation line. A stop-loss is an automatic order that exits your trade to prevent further losses if the price moves against you. Using the measure rule replaces emotional guessing with a strict mathematical exit strategy. Let's review the sequence. First, identify the visual mismatch, the sharp Adam peak followed by the wider, rounded Eve peak. Second, filter your setups by hunting exclusively for tall patterns forming during broad bear markets. Third, Wait for the daily price to close below the confirmation line to avoid the 65% failure trap of early entry. True profitability with the Adam and Eve double top comes from adhering strictly to these filters and mathematical targets. Pull up a daily stock chart, physically trace out the peaks, and practice identifying these specific structures for yourself. Let's review the sequence. First, identify the visual mismatch, the sharp Adam peak followed by the wider, rounded Eve peak. Second, filter your setups by hunting exclusively for tall patterns forming during broad bear markets. Third, wait for the daily price to close below the confirmation line to avoid the 65% failure trap of early entry. True profitability with the Adam and Eve double top comes from adhering strictly to these filters and mathematical targets. Pull up a daily chart, trace out the peaks, and practice identifying these structures for yourself.